Hi everyone, welcome back to Be Rich. As always, I'm sure Rupesh on the screen has put up what the FIs did on Friday and how much they sold and how much the DIs bought in. Those figures are there for you to look at. And I'm sure Rupesh should put up the other article also on the screen where you'll see the FPIs, which are the foreign portfolio investors, have been pulling out money out of India too. What is the difference between the portfolio investor and an institutional investor? Their goals are different. Institutional investors usually look at very short horizons. Foreign portfolio investors usually look at longer horizons. So when the long-term investors in India themselves seem to be pulling money out, that too they pulled out 64,000 crores according to this article. It's not biting good news for people who are looking for investment. But as investors, we are retail investors. It's good news because the markets are slowly moving into correction territory, slowly and surely. The main reason why these guys are pulling money out is for two. One, the dollar is getting stronger, so their returns are not so much anymore in terms of dollar. And two, Indian economy seems to be slowing down its growth, and the prospects of what they hoped for is not there because of the K-shaped recovery, all the things we have spoken about before. And in the short term and the long term I'm talking about 4 to 5 years, and short term meaning next year, the prospects, according to them, is not good enough for them to keep their money here, especially with what Trump is doing. Trump's presidency, things are going to be even more ruckus, and there's hardly any real sure things you can bet on other than having a lot of chaos. He seems to be generating chaos, especially what he's doing with Colombia, if he's been following the news. Him slapping tariffs on them slapping tariffs back on the US, and this whole migrant thing blowing up. So I really don't know where it will go, and how to predict it is very difficult. So I would say look for value in businesses you know and you understand, and see if they have a moat and they're resilient to put up with short-term turbulence. Talking about that, of course, Manappuram is one of those companies. Their business is very sound. They take gold from people and they lend them money, and it's a very safe business, and it is a reliable business. When my brother spoke over the weekend, a lot of you were panicking, saying Anand saying don't buy Manappuram. Anand did not say don't buy Manappuram. Anand did not say you should sell Manappuram. What Anand was saying is Manappuram is slowly becoming a diamond needle, according to him. And let me explain to you why he said this. The reason why he is saying Manappuram is becoming a diamond needle is, yes, we did consider Manappuram at higher prices. But now it is clear that after the current promoter, MD, he leaves the company, his family and his daughter aren't very keen on taking over that mantle. So the business will probably be sold to somebody. They'll settle it and they'll exit the business. The family will exit the business because he's already 70 plus. So we really don't know what the roadmap is. And that, till we get clarity, to see an upside on Manappuram will probably be maximum. It will stretch itself to 220 to 240 is what Anand feels. He feels it breaking 300 to 400 or even 500. There needs to be far more clarity on the future and leadership for Manappuram, for market to get really enthusiastic behind Manappuram. So there are a lot of moving pieces in the management of Manappuram, and till that comes to some kind of conclusion, clarity, which will happen, I'm sure, in the next few years. It's not going to take a lot of time because I'm sure the family is also aware, he's also aware, and people are interested in buying it, like Bain Capital. They're also aware of the situation, and it will come to some kind of fruition. In terms of someone like Bain Capital takes over, there's a great upside of it's even going to 500. But right now, in the short term, in the near term, there is no prospect of Manappuram going past 200 or 240 is what Anand feels. So if you have some capital to spend and invest in the market, he feels there are stocks which are at better value. If you saw those stocks we spoke about in that video, some of them are at greater value compared to Manappuram right now, is what Anand was saying. There's nothing wrong with Manappuram. And, don't right away get into a sour note. If you wish to buy Manappuram, you can buy Manappuram. We're not saying you cannot. This is just our view. This is our viewpoint, right? And trust me, we are humans and we get things wrong all the time. We try our best to be right, like how you try and be right all the time. But sometimes you do get things wrong, and this is possible that Manappuram may are wrong and might go to 300. This is just our view. It is not something written in stone. So keep this in mind when we tell you. The second thing which I want to talk about was a lot of confusion about Tamil Nadu Mercantile Bank. That Anand has said the promoters are very important, and keeping an eye on the promoters is very important. This is very true for everything other than banks in India, because banks in India are highly regulated, and the RBI literally runs these banks, right? The management team and whoever is going to run the bank has to be approved by RBI. And in the case of Tamil Nadu Mercantile Bank, the guy who's running the bank right now is from a public sector. He used to work for the government bank. He's the one who's running it. And it's a community bank. Yes, between the promoters, there's some skirmish happening, but the bank itself is sound. The bank's books are very sound. The loans the banks have given out is very sound. So as long as it's below price to book, below 1, it is of value. Once it crosses price to book of 1, then it'll slowly start becoming a diamond needle, and the value which we hope to see will be less. That is as far as Tamil Nadu Mercantile Bank and promoters are concerned. I'm sure then all of you would like to throw the boomerang on me and say, then why aren't you talking about RBL Bank? If it's true, RBI is controlling all banks you're saying, and the management, and I'm sure you'll use all those arguments with me when it comes to RBL. The problem with the RBL was, all what you say is true. That is why the last guy who was running RBL got pushed out. There's another person now sitting there, and they are raising money. But the problem is the mess the old guy is left. What he did with RBL and Bajaj, the tie-up what they did, and issuing credit cards to everyone who wanted a credit. I was issuing credit cards everywhere, and he was fighting HDFC and ICICI at the time aggressively in the market, and people who are not credit worthy were given credit cards. What we saw in microfinance sector played out in RBL. So all that is on the books of RBL, which needs to get cleaned up, and it's going to take some time. Now, will it get cleaned up? Of course, it will get cleaned up. RBI, like I said, is keeping an eye on it. They're tightening it, and Tech Mahindra also, I think, has recently invested in it. So it will improve. It will get better, no doubt about it. But then again, it comes to the point like what I said about Manappuram. We want to spend our capital on opportunities where we see growth, right? And if you're looking at it like that, there are places which are much better to invest your money than looking at RBL. So this is the kind of mindset you should also have, and flexibility you should have when it comes to thinking about investing. And like I said, whatever we say is not set on stone. This is just our view, and this is what we feel. You are welcome to do what is right for you and follow what you feel is the right path for you. And whatever research you do and insights you get will be, applicable to you. Like very famously, I said to someone recently that when Will Smith in his book, he says that when someone gives me advice, I always tell myself that advice they're giving me is worthless really to me, and it's more towards them and their experience. And if you think about it, it's very true. When I'm giving advice, it's based on my experience and my life and whatever I've gone through, and it's completely biased towards that. I really do not know what you're going through in your life. So that advice, yes, it's interesting, gives you some thought, it's value for that. It helps you think and maybe look at a different perspective. But at the end of the day, the decisions you make have to be based on your experience and your knowledge and what you feel is right for you. So that is very true in value investing. So you may know a company and a founder through your family, through your network, and you may have a lot more insight than I do. So that insight is valuable. So you cannot dismiss whatever you have learnt and experienced in life right away just saying because Anand says it or Vinod says it or anybody else says it. So you should use that trust you have in yourself, your instincts. So far in life you have managed to survive and come to this far. I'm sure your instincts are good. So do give it enough credit and listen to your own instincts a little bit before you decide to do anything. Take all the information Anand gives and I give or anybody else gives. Take it in, process it, and then come to your own understanding. I think Buddha was the one who said this very famously, that whenever I give you something, don't accept that as verbatim as a truth. Whatever I tell you, go back and think about it. And when you think about what I've said, you'll come to some understandings. And that understanding is the truth. This is very true for value investing. So when me and Anand share some information, you should take that information and think about it. Think about it and muddle over it. And from that muddling and thinking, you'll come out with some understandings. And that understanding is far more valuable than anything me and Anand are pointing at. I'm sure a lot of you appreciated over the weekend where I sat with Anand on the Sunday video we did. And we said, we'll try and do this monthly video on Sundays where we talk about the month ahead and the stocks we are looking at and considering. I'm sure a lot of you appreciated it. But I do wonder 2 or 3 times before doing it because I don't want you to think that is the only way to invest, that is the only list you should have. What I want you to learn is about value and stock, looking at stock values and buying it based on value. That is again coming back to Manappuram to finish with. So this is the main reason why Anand was talking about Manappuram being expensive now, because of the upside. It's got fundamentally nothing to do with the company. The company is very sound, their businesses are very sound. Like I said, the prospect of the leadership needs to be settled And once that leadership roadmap is settled, I'm sure then market will start moving again with Manappuram. As I was recording the video today, the market is very negative. Things are down, especially what's there in our list, what we've been considering it. Like IDFC is looking very, very cheap today. Not to the point it's cheap as South Indian Bank and other ones which are trading below book. It is from where we were. So this goes back to me saying why we stay in different coffee range. Someone in the beginning of December or mid-December asked me privately that I have some money, IDFC is very cheap, should I buy 1 lakh worth of IDFC? And I said, do not do it, and I told them to refrain from it. I don't know if they followed or not. Because if they had bought it at 68, 65 or wherever, and today they're seeing IDFC down at this, they'd be feeling a lot of pain. This is why Anand keeps on insisting on buying a different coffee. So the pain which you feel won't be as bad as you imagine when you're doing it in these small incremental steps. So keep that in mind as you're investing. Market is volatile and more volatility is expected as we roll on through this year. And I hope that kind of gave you some clarity as far as Manappuram and Tamil Nadu Mercantile Bank went, and even RBL Bank. Thanks for watching the video as always. I'll see you tomorrow with another one. Bye.
Hey guys, that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.